It's no longer the Mag 7. Sure, they've done great over the past 10 years. However, there's new hot stocks in hot sectors that are going to lead the way for the next 5, 10, or 20 years. And now is the time where we've got an opportunity to make some great profits going forward. And today in this video, we're going to talk about the top sectors that are going to lead the way and the top stocks in those sectors and how we can utilize LEAPS options going forward to multiply our returns. So whether you're a beginner or an experienced trader, we've got something for you in this video. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe, and let's get to it. All right, guys, going forward, 5 sectors I want everyone to focus on. That's what I'm doing. AI, artificial intelligence, cybersecurity, semiconductors, fintech, and robotics. And what are the top stocks in those sectors? There's Palantir, there's Tesla, there's Nvidia, there's SoFi, and what am I missing? Tesla, Palantir, SoFi, CrowdStrike, Nvidia. They're dominant in all those sectors. If we purchase LEAPS options in those particular companies going forward over the next 5 or 10 years, we can multiply our profits. Let's kick things off and talk about why these sectors are so important right now. Now, AI and semiconductors. AI is expected to add over $15 trillion to the global economy by 2030, and semiconductors are the backbone powering everything from self-driving cars to advanced robotics. Nvidia leads the way as a dominant force in AI chips, with its AI revenue expected to double again this year. As digital threats become more sophisticated, cybersecurity is now essential for protecting data and business continuity. CrowdStrike is at the forefront, using AI and proactive threat detection to keep organizations safe. Fintech is disrupting traditional banking, making financial services faster, more accessible, and user-friendly. SoFi is a leader in this space, reshaping how people manage money and access financial products. Companies like Palantir and Tesla are driving automation and innovation, transforming industries and creating new market opportunities. So robotics is huge. Guys, these aren't just passing trends. These are foundational shifts that are going to transform the world for the next 5, 10, 15 to 20 years going forward. So why am I so confident that these stocks will lead the way going forward? Well, these sectors, AI, semiconductors, cybersecurity, fintech, and robotics, require huge investment and deep expertise, which means there's limited competition and high demand for what these companies offer. The leaders we're talking about, Nvidia, CrowdStrike, SoFi, Palantir, and Tesla, already have proven track records, consistently delivering strong growth and breakthrough innovations. Looking ahead, analysts expect these industries to outpace the broader market for years, making these stocks prime candidates to drive the next wave of market leadership. Now let's address the too late myth. Now, you hear people say, and the media especially, it's too late. These stocks are already up. Well, it's easy to think you've missed out because these stocks have already had big runs, but that's a common myth. Just look at Apple and Amazon 10 years ago. People said they were too expensive, yet both went on to deliver massive returns for investors who stayed the course. The key isn't timing the market, but the time in the market. True, leaders, they keep growing as their industries expand, and long-term investors are often rewarded for sticking with that innovation and those companies. All right, I've made a lot of videos on LEAPS options, and check those out if you haven't seen them. But let's quickly review what LEAPS are, what they stand for, and why we use them. So LEAPS stands for Long-Term Equity Anticipation Securities. So what they are is they are options, but rather than 30 or 45 days to expiration, they're out 9 months to a year, even up to 2 years out until they expire. And what we look to do on stocks that are beaten down and down is go ahead and buy a deep in the money call option. And what the advantage of using LEAPS is over buying the stock outright is they're much more capital efficient. So to buy 100 shares of a stock that is a $100 stock, it's going to be 100 times 100 shares, or $10,000 to control those 100 shares of stock. Now, utilizing LEAPS options, you can do that for a third or a fourth of the cost. So they're much more capital efficient, and we can participate in the same upside of the price over time as the stock price increases. So let's jump into some live trades, and I'll show you on the option trading platform just how they're placed. Okay, guys, the first one that we're going to look at is Palantir. Ticker symbol PLTR. We punch it in here, right here in the upper left on the, this is the Tasty Trade option trading platform. It's very intuitive. I've got a link down below. If you are not using it, I highly recommend it for option trading. It's super intuitive, and I've been using it for years. Here's the income statement. You can go right here to this tab, and you can see for Palantir, the revenue and net income increasing annually year over year. The balance sheet, the assets and liabilities, same. They are a extremely successful business. Their margins are huge. Look at that, 80%. Price to earnings is high. And we just had a run up. But again, I'm not worried because I'm doing this long term, and I'm trading not only the LEAPS, I'll sell a call against it. And now's a good time to sell the call, definitely, because it's been up. It's at 120. So it is at highs right now, and there's good IV rank of 65. So we can collect a lot of premium for doing that. So let's go to the trade page, and we're going to go out close to a year. I'm going to go to 322 days, the March 2026. And then we can buy, I like to go 65 delta at least. This is the 65. You can buy that for $34.60, or the 115 for $36.45, or the 110 for $38. I'd like, typically I'll go a little bit deeper in the money, but let's just do the 120, right? Well, we'll do the 115. We'll compromise. So 36.70. Now that controls, if we go to the mid price right here, 36.45 is what we should get filled out with that trade. 36.40. It's changing. The market's open right now, but we're up 4.8% today. So you might want to wait for a little pullback to put this on. But again, we're going to trade both sides. I'm going to show you how and why here in a second. But $36.40 times 100 is $3,640 to place this trade in Palantir and control the 100 shares of stock. Now, if you were going to buy 100 shares outright, it would be $121.95, $121 per share times 100 shares. So that's $12,200 in order to do that. We're buying it for a fourth of that. So that's why these options are so capital efficient. Now, here's what I like about the Tasty Trade platform. Go to curve mode and then analysis tab. And you can see as the stock price increases, once you get to cover the cost of the contract, and again, we're a year out, 322 days. When it gets up to this above 150, that's when we really start to make and profit and make money. And Palantir will continue to do well, as we talked about over time for those reasons. So what I like to do is buy the deep in the money call option and then sell a short-term call against it and take advantage and get monthly income from that as well. But if you get up to the 170 price here, we're at 1885. In order to 2x our income, it doesn't have to, we're up in $3,000 range at this 180 price. And this will be at probably by the end of the year, it could easily be at 180. So we could 2x double our money. But what is even nicer is we're going to go ahead and sell a short-term call against this. So I'll close this out, leave it open. We've still got the trade on, and we can sell the monthly. We've only got 14 days left in May in the regular options. I've got all expirations, the weeklies on. You can do weeklies as well. And actually, they have earnings coming May 5th, but I think they're going to kill it. So I expect it to move up. What I would do With Palantir, I like to trade the monthlies. So I would go out to June, the 49 days, and we can sell. And look at this. We can sell the 150. So we've got $30 upside, and we can collect $5.05, $505. That brings the cost down to $3,115. Now, if we do that 6 more times, and keep in mind, we've got this on for almost 10 months, 11 months. But if we do that 6 more times, that covers the cost of this, and we own the 100 shares outright. But we're collecting monthly income. We can collect $500 a month and still make the money up to $150 on the LEAPS contract as well. So let me know if that makes sense. Any questions, let me know down below. But we hit review and send and place the trade. Okay, guys, I'm doing the exact same thing in Nvidia. Income statement, you can see increasing revenue, net income. Same with the balance sheet, the assets and liabilities. Incredible company, the ratios. Again, the PE is going to be a little bit high on these stocks because they're the leaders in the industry. Great gross margins going forward. But if we go to the trade page on the platform, and actually this one, it's up a little bit today. The whole market's up today. But they've got earnings on May 28th. But you can see the 50-day and the 200-day. The 50-day is starting to trend up. We're right in the middle of the RSI. But again, we're trading both sides. And this is a long-term play. So I'm not worried. Nvidia a year from now is going to be much higher than where it's at right now, in my opinion. Let me know in the comments below what you think. But if we go out to that March, and then we go to we can go to the 66 delta, or we can go to the 100 for 29.60, or we can even go the 110. That's 63, but now I like to go 65. I got to stick to my rules. 26.85 for the 105. Let's see what the other dates are for June. 412. We've got 2,500. 110 is 27.10, and March 110 is 24. So there is a discount for the March, and any big runoff, a big huge upside, I'll close everything out and then wait for a pullback. So I don't really go out more than a year because I play both sides, and I'll take it off if there's a big run up, and then look for a pullback. Let's look at January. I don't want to go January. I want to go closer to a year. So we're in March. So let's go March. We'll go 105. We will buy. Calls are on the left. Puts are on the right. We're going to go to the ask, the buy, which is right here. 26.75 is the mid price. Again, I'll show you that curve mode. You can see we make money as the stock price goes up. It's been way up, and we right here at 170, we'd make P&L, we'd make over $4,000 going forward, and that's like a triple. But what we're going to do is we're going to go back to the table mode. We've bought this, and again, keep in mind at 114 stock price for 100 shares, it would cost $11,448. We're going to pay $2,600. Plus, we're going to collect money against it because we're selling a short call. We'll go to that June again, and we will look to sell. We're at 115. We're going to have a 10% upside to 125. We can do that. It's the 34 delta, so there's a 66% probability of profit of it staying below this. But we can click on that for $4.30. So $430 we're collecting, and watch this 2680 go down by $430. 2248. So we do that every month, and we make money on both sides. We hit review and send and place the trade. All right, guys, if you want to continue to see the exact trades that I'm placing, go ahead and hit the like and subscribe buttons down below. Also, download that free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Also, drop a comment down below. Let me know what you're trading, which stocks you like. Ask a question. I answer every one. Thanks for watching. I'll see you in the next video.